If you don't have a switch that changes that's when you get yourself into serious technical trouble, because the model has technically switched and you're not aware of the fact that the model has technically switched. And if you're not aware of that, you're going to be making terrible decisions around that as a possible play, right? You're going to make terrible trading decisions. And one of the questions that we've got to ask the model is, well, which model is it that's moving? For example, on Friday, the back end of the curve dominated everything. Everything was driven by the back end leading. Today, everything's been dominated, Jack, by the front end leading. We've seen a front end flattener. We're currently seeing a front end steepener. So we're starting to see that repricing of the central bank narrative. So we're recognizing that when there's a major repricing taking place, this is when the path for the central banks is really not known. We've obviously seen a major correction in oil prices to the downside since the overnight session opened. But we've also seen some recent rallies back into oil, which have allowed the repricing to be re-questioned as well. So this is when the model changes, Jack. This is when you start seeing that raking, that process of, well, what's normal? How does it fit into the norm? And if it doesn't fit into the norm, then of course the model technically should have a switch, shouldn't it? It should technically have a switch. So if we don't have that switch, we end up making bad decisions at bad prices in bad areas. And unless we understand the story, we are bound to make the same failure. Like that equity, for example, was driven by the model switching. And if we didn't know that, we'd have made a terrible mistake on equities. So take a look at the Friday equities, for example. I want you to focus on the 2s10s curve. So the 2s10s curve is the rainbow band here. Okay, so can everybody see the 2s10s curve? What line is leading? The 2s10s curve. What line is leading? Just give me a color. The blue line's leading, right? So what that means is the back end of the curve is leading, right? The back end is the leading line, which is the norm for the markets, right? The blue line is leading. The back end is leading. So therefore, this is the norm. This is what we would determine to be a market normal event type situation. But if we go fast forward, and if we try and obviously understand this, and we trade bonds according to what we're seeing, back end leading, this is how it's going to play out. Then if we move, so in other words, what's leading here is obviously inflation. But if we move into today's market, which line is leading? You might be wondering what the hell color that is, but it's the purple line, right? So the purple line's now leading, isn't it? So something's changed here. This is Jack's point that he was making earlier on about these models, about R squared. If I simply played the purple line to trade towards the blue line, I would have traded this as a buy on the purple line, expecting this to go higher. And because I would then be expecting this to go higher, I'd be expecting equities to sell off. And in that situation, it's quite clear that the purple line's leading, suggesting that the blue line's going to fall, and therefore equities are probably going to rally. Equities did rally. And likewise, when we came into this change here, you'll see that the purple line is absolutely leading back off the high price, giving us that perfect excuse, as you well know, to then sell into the bonds. Sorry, sell into the, sell into bonds as well, but sell into equities. And as we sell into equities, we're then able to take a shot at the sell-off that we've just seen, absolutely exposing everybody that doesn't know this. Because the short term, the central bank repricing absolutely is very much in place. 2-year bond prices exploding, and we're giving ourselves a real storyline to lean on here. So we give ourselves a story to lean on. We see the story forming in this area, and obviously sell side equities in line with the fact that we know that purple is now leading. Well, that sell on equities came in before it even turned here, didn't it? Look, the purple's already starting to lead. So we knew as the price rallied here that the front end of the curve is gone off of this as a buy trade. Way before this candle even formed, way before the red candle even formed, we knew this trade was gone off the buy trade. And we were able to walk away from that trade instantly and say, no cheers, buddies. And then we could take a shot at maybe getting some of that sell side lovely into our books, not into somebody else's. So this transition in terms of the model is what Jack was asking about, this idea of finding the right model. Because if I just traded this according to a static, non-changing model, we'd have got absolutely our arse felt, wouldn't we? We'd have got absolutely mullered here. So we would have been in the wrong trade at the wrong price, doing the wrong things. Because we understand that the trade is in the right place at the right time, we can obviously get the right narrative off the top edges and take advantage of this sell-off here. So again, it comes back to Jack's point about the raking of data. This is the whole concept of R-squared. That's the limitation, if you like, of systematically following R-squared, is that it's great systematically when the system's in play, but systematically when the system changes, you got yourself a problem, child, and you're going to have to be very, very aware of it. When the central bank's repricing changes, in other words, when the purple line is leading the charge, I don't have any doubts about what's going to happen. When the back end is leading the charge, that can actually be, as you saw in this area here. The back end here was leading the charge. The blue line was leading the charge here. Well, you can actually be bullish equities in that situation. Does that make sense? Because when the back end is leading the charge, that's telling us about a bit of inflation. It's telling us a bit of opportunity. It's not as absolutely crystal as it is when the purple line is leading the charge. But when the purple line leads the charge, when that purple line is leading the movement, the probability gets even stronger because it's now anchored to central bank repricing. And if we can't see what's leading, well, it means we haven't seen enough data at that point. It should be dead obvious. It should be crystal clear, because the idea of it should be starting to fan out. You should be able to see which one's starting to pull the other one. And if we can see it, well, we can make a great trading decision at that stage. And we can always hedge it against the bond market at that point as well, because obviously if we know that one is moving, if there is a central bank repricing coming in here, I want to absolutely be long bonds. And we've made a lot of money on the long bond. Well, in this area here, I want to go short bonds. Remember I showed you the short bond enemy? I showed you the short bonds trade, didn't I? So we top ticked the bonds because there was a central bank repricing going on. So we're going to top tick the bonds, aren't we? Beautiful. So I don't know if that's making it more clear, Jack, or less clear.